It's money time!
Wait up! I'm right behind you!
Thank you for joining us today for another episode of Landon Capital News. I am your host, Sean Smith.
Hey guys, you're always the first ones to run to the bus, and it drops you off in Landon Capital headquarters, but why?
We're giving the kids out there important stock news. Everyone needs to know how companies grow and make money and how they operate. This is super important.
Yeah, I think every kid should understand stocks. My mom says that people should know what they're investing into.
What are people investing into?
We're about to tell everyone on the show.
Let's dive right into it. It's been a huge week in the biotech sector. Madrigal Pharmaceuticals received FDA and European Commission approvals for Rezdiffra, making it the first approved treatment for MASH in both regions, while Vertex Pharmaceuticals is advancing with multiple PDUFA dates for povetacicept, including a rolling review for potential accelerated approval. Vertex Pharmaceuticals Incorporated has had its score changed from a 0 to a 5 because the company has multiple PDUFA dates within the next 6 months, including a rolling review for povetacicept BLA submission for IgAN treatment with the first module expected before the end of 2025 and full submission in the first half of 2026 for potential accelerated approval. And Amgen discontinued the Fortitude 102 study due to inadequate efficacy, highlighting challenges in oncology drug development. Guys, a biotech company must get FDA approval in 3 phases before a drug is distributed to the public for consumption. The Maritide Phase 2 study is primarily a maintenance study designed to inform Phase 3 strategies rather than provide direct weight loss comparisons. Amgen's top pipeline catalysts for the next 6 to 12 months include the Vesalius-CV study and the development of Imdeltra and tarlatamab.
Sean, let me get in on some of this sauce you're spilling on Let's talk about how companies stay competitive by buying their competitors. BioCryst Pharmaceuticals announced the acquisition of Astria Therapeutics, which is expected to enhance its market position and financial stability.
I like that.
Time for the money dance! Companies report earnings every quarter of the year. Astronics reported Q3 revenue of $211.4 million, driven by an 8.5% growth in its aerospace segment, but fell short of analyst estimates due to $32.6 million in refinancing costs. The company expects fourth quarter revenue between $225 million and $235 million, indicating a potential record annual sales level. The Andersons, Inc. is advancing its Port of Houston project, a strategic investment aimed at increasing export capacity for soybean meal and enhancing efficiency in the current grain operations, with an expected completion in mid-2026. The Andersons is in the process of incorporating the assets of Skyland Grain, LLC, into its agribusiness segment, which is anticipated to improve operational efficiency and expand market reach. Encore Capital Group plans to announce its Q3 2025 earnings on November 5th, 2025. Analysts are expecting revenue of $410.69 million and earnings of $1.83 per share. The average target price for Encore Capital Group is now $57.25, with a high estimate of $61 and a low of $55, suggesting a potential increase of 32.37% from the current price of $43.25. Analysts expect Ziff Davis Inc. to report earnings of $1.78 per share for the quarter ending September 30th, 2025. All right, let's bring Sean back in.
Thanks, Chad. Hey, do you have an idea what good movies are playing?
There's a ton of good ones. Why?
AMC Entertainment Holdings Incorporated has recently disclosed a refinancing agreement that reduced its debt by approximately $40 million without issuing new shares or cash. Real estate is coming back. There's optimism, with interest rates down 0.25%. Anywhere Real Estate Inc. reported third quarter 2025 revenue of $1.6 billion, a $91 million increase from the previous year. Anywhere Real Estate announced a net loss of $13 million for the third quarter, a $20 million decrease compared to the same period last year. Finally, we end with energy.
Did you say you need some energy?
No, Vital Energy Inc. Vital Energy is projected to achieve an annual earnings growth rate of 128.85% over the next 3 years, despite a slight annual revenue decrease of 0.2%. Profit margins are expected to improve significantly from negative 38.5% to 24.0% within 3 years, driven by operational cost reductions and strategic drilling inventory expansion. That's all the time we have for today, guys. I'm Sean Smith.
And I'm Chad Stokely. See you next time.